This is Lanto Trades, a 22-year-old kid who made $1.75 million in just 3 days day trading prop firm accounts. Today, we are going to dive into the details of how he did it. We are going to break down his trading strategy piece by piece, analyze the trades he took to make $1.75 million with exact entries and exits, and we'll even hear from Lanto himself on what it takes to get to a level of trading where making millions of dollars in just a couple of days is reality, so that you can get there too. There's a few things you need to understand about Lanto's strategy before we take a look at the trades that he took. His strategy is extremely discretionary, meaning it's not a one-size-fits-all for each day in the market. Lanto is not trying to predict the market, rather read and react based on what the market is showing. He does not come into the trading day with a bias. He comes in with if-then statements, possible scenarios that could play out during the trading day. The way Lanto determines these possible scenarios is by simply using what the market has already given him. He finds the levels where the market will most likely be drawn to. This is called draw of liquidity, and it can appear as many different things: major swing highs or lows, previous day highs or lows, overnight highs or lows, price gaps like new day or new week opening gaps, daily, 4-hour, 1-hour, and 15-minute fair value gap. These levels of price are extremely important because they are key levels to determining whether the market is bullish or bearish. Lanto uses these levels as take profit targets, as well as a tool to determine if the market wants to continue trending or reverse. He mainly uses them as a way to confirm his trade thesis. A real-world example of this would be if price breaks above overnight highs and we see price continue to be bullish, I would look for longs to fill the daily fair value gap. So now we understand how Lanto determines when and if to look for a trade, as well as where to take profit. Now let's take a look at how he enters these trades. Most of his trades are what is called a continuation model, where you are looking for an entry going with the trend. His most used entry model is an inverted fair value gap continuation model. And this is the exact trade model he used for all 3 of his trades on his sprint to $1.75 million in profit. He will use this entry model when he has high conviction on the draw of liquidity. This is a perfect example of his inverted fair value gap continuation model. At New York Open, price breaks above overnight highs with extreme displacement, creating a 5-minute fair value gap on the way up. Price then retests this 5-minute fair value gap, creating a bearish 1-minute fair value gap. Price eventually inverses this 1-minute fair value gap by closing above it, creating what is now an inverted fair value gap. If price wants to seek higher from here, this would be a very good entry model to get in longs before we see that pump. And as you can see, that's exactly what price does. Now let's get to what you clicked on this video for. The trades Lanto took. The first trade that he took was on November 5th. The past couple days have been a very steep sell-off, almost 900 points. The bears have fulfilled their ultimate draw of liquidity being this new week opening gap, meaning it would be a likely scenario for us to see a reversal out of this area. And during the overnight session, that is seemingly exactly what we see take place. We see a very strong bottom get made here in the middle of the Asia session, and buyers immediately taking back over, rocketing price up 250 points in just 2 hours during the Asia session. That is extremely bullish. On the way up, we create this 1-hour fair value gap. During the London session, we retest this 1-hour fair value gap. This is a very key zone. Are the buyers going to take back over price and send us higher, or are the sellers going to power through and send us to new lows? Scenarios like this are where Lanto's model thrives. What Lanto is going to do here is he is going to drop down to a lower time frame session like the 5-minute and determine what is going on. Are the buyers taking back over, or are we going to sell off and see a new low get created? As of right now, it seems that the buyers are taking back over. We are seeing strength. On this reversal back up, we create this small 5-minute fair value gap. What Lanto is looking to happen here is to get a retest of this 5-minute fair value gap and immediately get a bullish reaction. If that happens, he will be looking for longs higher. So let's see what happens here. We retest this 5-minute fair value gap, and bang, look at this reaction outside of this gap. Lanto enters longs, sets his stop loss just at the wick low, and he is looking to target this 4-hour fair value gap all the way up here. 9 hours later, Lanto gets trailed out just at this swing low for his largest trade ever. 330 points, 11R, $603,000. This brings us to Lanto's second trade, which took place on November 6th. Price has rejected from this 4-hour fair value gap, not once, but twice. This is an extremely bearish sign from the market. But again, Lanto is not trying to predict what the market is going to do. He is simply reading and reacting. He is coming into this knowing if price breaks through overnight lows and we continue to see a bearish reaction, chances are we are going to see a very strong sell-off. New York session opens and we immediately take out overnight lows with heavy selling displacement. Price continues to move lower with the sell-off coming in even stronger. On the way down, we create 3 back-to-back-to-back humongous fair value gaps. What Lanto is anticipating price to do is retest these fair value gaps, fail, and send us lower. If that can occur, this will be an A+ setup. Let's watch what happens. Price retests these consecutive 5-minute fair value gaps. You can't see it here, but it did create a 1-minute fair value gap on the retest back up. Price inverted that 1-minute fair value gap here, where Lanto enters shorts, stops just above the swing high, and he is targeting this 4-hour fair value gap fill. Let's see what happens. Price comes down. We're continuing to see a sell-off here. Price enters that 4-hour fair value gap. Now is the point where Lanto is trailing his stop loss. And Lanto gets trailed out of this trade right here at this swing high for a 230 point profit, a 5.5R trade, and only a measly $438,000. His largest trade record is still safe until the next day. Coming into the New York session, price has been extremely bearish overnight. As you can see, the London session alone has dumped price over 300 points. That means unless we see a major change in the market sentiment, we are expecting price to continue to be bearish. And that is exactly what happens. Right at New York Open, we flush through overnight lows, creating once again gigantic 5-minute fair value gaps. We see price buy back up, retesting overnight lows. This is a very key area. If we can see price continue this buy back up and get above these wick highs, it is possible that we could see overnight highs be visited. However, if the buyers fail and sellers take back over, price is going to dump. This is a very key area in this New York session. So we need to drop down to a lower time frame and see exactly what is going on. Price has created this 15-minute fair value gap. Let's see what happens when we retest this area of price. We wick up barely into it, immediately reject out, inverting a 1-minute fair value gap that was created on the way up that, I'm sorry, you can't see in this. Lanto enters shorts, stops just above the swing high, and he is targeting this major swing low. This is a very strong draw of liquidity here. So let's see what happens. Price immediately starts dumping off heavily. We come down into that major swing low, and sellers are continuing to power through. What makes Lanto so profitable and such a good trader is his ability to let his winners continue to win. Just because his ultimate draw of liquidity has been met does not mean he's going to take all of his profits out of the market. What he is doing in a scenario like this is he is trailing his stop loss and trying to squeeze out as much profit as he possibly can. Price continues to sell off here, heading lower and lower and lower. Lanto trails his stop loss right to the top of this candle, and eventually he gets trailed out for a 244 point 5.75 R and $613 trade, squeezing out an extra $100,000 between his original take profit target and where he eventually ended up taking profit at, bringing him to $1.75 million of profit in just 3 days. Now we will hear from Lanto himself discussing what got him to this level of trading where he can make 7 figures in just days. These are the major points I want you to focus on when listening to this clip.
If you want to talk more about your scaling and how you got from like where you were like a year ago to how you are now, and like what do you plan on doing? How can people get there basically with size? And
I'd say the biggest important thing I think is just simplifying your trading. I think people get like flustered, they get overwhelmed. So look at P&L, they'll look at a certain type of money that people are like. I guarantee you a lot of you guys in chat are probably like, dude, how the fuck do you make this much money out of 4 accounts? It's just more so a skill set thing, and as you improve when it comes to your skill set, you also improve in terms of being able to hold your trades naturally, because when you improve your skill set, you improve your psychology. I'm almost 5 years into trading, and obviously I've scaled up over time, but it's been a process of where, how can I refine my strategy, my model more and more and more? As I do that, leverage up. The only sole difference between like today, these last couple of days, chat, as opposed to like any time else, the only difference is I've just added a couple more contracts, and B, I just haven't gotten trailed. So through my system, through my risk, like what alters a big day versus losing, it's the same way every single time. I trail the same way, it's the same approach. The only difference is price has been super directional the past couple of days, and on top of that, I've leveraged up. That's what's resulted in this, right? So it's just about following your process and just not getting overwhelmed, not getting too high or not getting too low on your P&L. That's really it. So it's just emotional detachment, more so a psychological process on top of obviously the skill set. That's what's most important. It's not just the chart chat that you're more so battling here, it's yourself. That's really the truth. The markets, they don't care about who you are, they don't care about what position you're in. What really matters is self-reflection entirely, alongside obviously execution. And so when you master yourself, when you really focus on getting yourself right, your psychology right, a lot of times you'll become much better at risk managing, alongside making decisions, right? When you more so look to focus on yourself. At the end of the day, if you dumb it down, what traders are is we're risk managers and we're also decision makers. Those are the two things that we are, right? And so you got to focus on really getting those down too, right? Those two down, You got to focus on that, right? Psychology is a big thing. How many times, chat, have you taken a trade or had a couple of days where you do really well, and then when it's one day, that goes all down the drain, right? How many times have you just gone on a massive losing streak? How many times have you just taken trades where you're just completely frustrated and emotionally attached? That's all normal, but what's important is taking the right steps to prevent that from happening, or more so minimizing it, right? The best type of traders in the world, they have, their approach, they have their system, they have their model, and that's it. Sizing the P&L is completely irrelevant to what their process is, right? And so when you base, your process to your results, like we talked about earlier, you got a lot more emotionally attached, which results in a lot worse trading, right? You got to make sure, right? Traders are decision makers. That's what we are. That's what we get paid for. What's most important, what will truly make you profitable long-term consistently is you. You got to take the fucking right steps. You wanted to see these type of results. The only way you see this is if you do the right things over and over and over again, to where they become a habitual practice, to where they become a subconscious doing, right? A lot of times, chat, I'll go on the chart and I'll see certain things subconsciously that I won't even really think about much. And then someone in my chat will ask me, yo, why do you do this here? And I'll explain it. And to them, they're like, holy shit. But to me, it's a subconscious thing. It's like, it's something I barely think about, because it's something I practice and I installed consciously initially over time, which became a subconscious doing, right? You got to do that. You got to do the right things over and over and over again. So if you're a bad trader now, what you got to do is install the right steps. And right now, it'll be a very hard conscious effort. Like right now, you start today, whatever. You start to incorporate the right things consistently. Right now, it'll be a pain in the ass. Trust me, it will be. It happened to me. But over time, what'll happen is when you force yourself to keep doing the right things over and over and over again, eventually it'll become your realm. It'll become your reality. And so that will become a subconscious doing, almost like second nature. And so when you have good habits built up in your brain psychologically, when you operate via the charts and you look through the charts and look to execute, you're naturally thinking at a much better rate, right? As opposed to prior.